All right, let's talk about something that is honestly absolutely critical for anyone serving on a homeowners association board. We're going to dive into liability and, more importantly, how you can protect your own personal assets.
So let's just cut right to the chase with a pretty big and, yeah, kind of scary question. Could the volunteer work you do for your community actually end up bankrupting you?
And the short answer is yes, it can. See, if your board gets accused of what's called a wrongful act, and that can be anything from mismanaging funds to denying a neighbor's request to paint their house purple, you personally can be sued. Now, this risk isn't always what you think. It's not always about a physical accident, a slip and fall by the pool. A lot of the time, the biggest financial danger comes directly from the decisions your board makes every single day. And here is the #1 misunderstanding that gets so many boards into hot water. Most people just assume their standard general liability policy has them covered. But for the kinds of risk we're talking about here, that policy leaves you wide open. So let's break down the huge difference between the insurance you probably have and the insurance you absolutely need. This is where so many good, well-meaning volunteers end up in a world of trouble. Okay, so on one side, you've got your general liability. That's for physical stuff. Someone slips, a tree branch falls on a car, that kind of thing. But on the other side is directors and officers liability, or D&O. This is a completely different animal. It's built from the ground up to cover wrongful acts, claims that come from the actual management and decisions of the board. Here's maybe the best way to think about it. I love this analogy. D&O is basically malpractice insurance, but for the job you're doing as a volunteer on your board. Simple as that. So what exactly is a wrongful act? It sounds pretty serious, right? Well, it is. But it's also a really broad term for any claim that comes directly from the board's decisions and management duties. It covers a lot more than you might think. Let's make it real. We're talking about things like a breach of duty, not acting in the community's best interest, or accusations of financial mismanagement, or, and this is a big one, claims that you enforce the rules unfairly or in a discriminatory way. To really see how this plays out, let's just walk through 3 super common scenarios that lead to lawsuits against HOA boards. You'll be surprised at how normal they seem.
Okay, first up, failure to maintain. So a homeowner reports a leaky roof in a common area. The board kind of drags its feet on the repair, maybe for months. That leak gets worse, and now the homeowner's personal property is damaged. Bam, they sue the board for negligence.
Or how about this one? Financial mismanagement. A new audit comes out and, whoops, it shows that the association's money wasn't used correctly. Residents are furious. They claim this mess has hurt their property values, and they file a lawsuit against the board members who are in charge.
And finally, wrongful enforcement. A resident wants to do a home improvement project, but their request gets denied. Then they look around and see that other similar projects got a green light. So they sue the board for discrimination, claiming the rules aren't being applied equally. In all 3 of these situations, it's the D&O policy that steps in to pay for the defense. Okay, so that's the scary part. Now let's shift gears and talk about the solution. How does this directors and officers insurance actually protect you when a claim like that lands on your doorstep? So here's how it works. D&O is, first and foremost, a defense policy. Its main job is to pay for the mountain of legal bills that come with a lawsuit. We're talking lawyers' fees, court costs, the whole shebang. It also covers settlements if you need to make the problem go away. And the big one, it builds a firewall that protects your personal net worth so your house and your savings are never on the line. And don't underestimate those costs for a second. To give you some perspective, the average cost to defend just one wrongful termination lawsuit can easily top $100,000. And here's the kicker. That's true even if you win the case. The legal bills alone can be absolutely devastating. Okay, so maybe you're sitting there thinking, great, we have a D&O policy, we're covered. That's awesome. But that brings us to the final and maybe the most important question. Are you positive that policy is actually enough? I want you to ask yourself this, seriously. Do you actually know the specific sublimits and, even more importantly, the exclusions that are buried in the fine print of your current policy? Because the devil is always in the details. The truth is, a lot of standard, off-the-shelf policies are filled with these things called carve-outs. They're specific exclusions for certain types of claims that can leave you right back where you started, personally exposed. For example, some policies won't cover lawsuits that are just seeking to force the board to do something, like approve a renovation.
Others might exclude any disputes you have with vendors. These little gaps can make the insurance almost useless, leaving your personal assets totally vulnerable. And look, this is really what it all boils down to. You volunteer your time, you volunteer your energy, you do it to make your community better. The last thing you should ever have to do is volunteer your personal finances too. So please, take a hard look at your policy. Understand what it doesn't cover, because the risk you don't know about is the one that can hurt you the most.